Did you know that billionaire investor Bill Ackman once called a popular weight loss company a pyramid scheme and waged a financial battle that captured the world's attention? Yes, we're talking about the man who took a jaw-dropping $1 billion short position against Herbalife, stirring up a storm in the financial world. While that battle had its ups and downs, Ackman's knack for making bold moves hasn't waned a bit. Over the last decade, his hedge fund, Pershing Square Capital Management, has notched up a staggering 250% gain, outpacing the S&P 500's impressive 225%. Just last year, they raked in a 26.7% return. But what's Bill Ackman up to these days? And what could it mean for your investment strategy? Today, we're diving deep into the latest moves from this investment maestro, revealing the top picks he's loading up on, and one you're probably not even aware of. From tech giants to the fast food chains you love, Ackman's latest bets are shaping up to be as intriguing as ever. So, are you ready to uncover the secrets behind Ackman's recent investments? And more importantly, could his latest moves signal a game-changing opportunity for you? Let's find out together. 1. Restaurant Brands International. At the heart of the bustling, vibrant world of multinational fast food empires stands a giant. Restaurant Brands International, or RBI for short. This is not just any company. It's a culinary colossus that dominates your quick meal choices. Yes, we're diving into the realm where Burger King reigns supreme, where Popeye spices up your life, where Tim Hortons pours heartwarming brews, and where Firehouse Subs stacks up your sandwich cravings. All these are under the umbrella of RBI, a gem in the investment portfolio of none other than Bill Ackman. Ackman, a maestro in the orchestra of consumer-driven investments, sees RBI as a masterpiece. Why, you ask? Because it's not just about flipping burgers or frosting donuts. For Ackman, RBI is a symphony of strategic investment, representing a hefty 17.6% of his portfolio's value. Imagine 23.4 million shares, a value echoing to the tune of $1.9 billion. This isn't just a fleeting romance, it's a committed relationship since 2012, making RBI one of the stalwarts in Ackman's investment universe. But what's so enchanting about RBI for Ackman? It's the company's versatility and reach in the fast food domain, offering what Ackman calls a high-quality, capital-light growing annuity. It's about those high-margin brand royalty fees that keep the cash register ringing. Despite the market's rollercoaster ride, Ackman's belief in RBI is unshaken, holding onto his shares like a treasure. And there's more to the story. Burger King, one of RBI's crowning jewels, is on the resurgence path, outperforming expectations and fueling RBI's growth. The company's recent strategic move was buying back 1,000 stores from its largest Burger King franchisee, a bold step in reclaiming its kingdom. With over 31,000 restaurants worldwide, RBI isn't stopping there. It's eyeing a future with 40,000 outlets by 2028, expanding its empire, even if it means altering the royalty fee landscape Ackman values. 2. Lowe's. Now, nestled in a market where it stands shoulder to shoulder with Home Depot, Lowe's isn't just any retailer. It's a key player in a duopoly, a place where weekend warriors and professional contractors alike find their sanctuary. Ackman's affinity for consumer stocks shines brightly with Lowe's. His investment firm, Pershing Square, holds a robust stake in Lowe's amounting to $1.47 billion, which translates to a substantial 13.6% slice of his investment pie. The journey with Lowe's. began in the sunny days of the second quarter of 2018. And what a journey it's been! Since laying down the first brick of investment in Lowe's, Ackman has witnessed the stock soar by 120%, outpacing the S&P 500's 79% climb during the same period. But why Lowe's, you might wonder? Ackman's strategy isn't just about investing, it's about envisioning potential. He sees Lowe's not just as a store filled with tools and timber, but as a burgeoning contender, steadily bridging the gap with its rival, Home Depot. His insights seem to be on point, as Lowe's has indeed been outpacing Home Depot in the stock performance race since Ackman's initial investment. 3. Hilton Worldwide. When you step into the grand lobby of Ackman's investment suite, you'll find Hilton Worldwide Holdings, a beacon in the hospitality industry. Holding a significant 16.2% stake in Pershing Square's portfolio, Hilton isn't just another investment. It's Ackman's ticket to the burgeoning realm of global travel. Diving into the world of Hilton, we find a company that's much more than its flagship Hilton hotels. It's a constellation of brands, each with its unique flavor, from the opulence of the Waldorf Astoria to the practical charm of Embassy Suites and the homely allure of DoubleTree. But here's where it gets interesting. Hilton is not just in the business of owning real estate. Instead, it's the mastermind behind the brand, licensing its name to hotel operators who, in turn, leverage the Hilton cachet to command higher rates, enhancing their allure in a competitive market. The narrative of Hilton's journey since Ackman's investment in 2018 is one of resilience and strategic acumen. Despite the pandemic's shadow, with stifled global travel, Hilton's business model stood robust, buoyed by a licensing strategy that insulates it from the brunt of economic downturns. While the pandemic curtailed earnings growth, Hilton's story is one of anticipation, poised on the brink of a resurgence as global travel springs back to life. Ackman's investment in Hilton is a testament to his search for businesses that not only survive, but thrive amid challenges. It's about identifying companies with a predictable cash flow, resilience to market shifts, and the ability to wield pricing power effectively. Hilton's performance, outstripping the S&P 500 with a 161% gain since Ackman's engagement, underscores the wisdom of investing in a brand that's not just a leader in the domain, but also strategically positioned to capitalize on global travel's revival. 4. Canadian Pacific Kansas City, CP. As one of North America's transportation titans, CPKC now holds a pivotal place in Ackman's investment universe, making up 10.4% of Pershing Square's portfolio. CPKC isn't just another railroad company. It's a groundbreaking merger between Canadian Pacific and Kansas City Southern Railway, making the first railway network to stitch together the United States, Canada, and Mexico. This isn't Ackman's first rodeo with CPKC. He's revisited this investment, acknowledging past disengagement as a missed opportunity. But what makes CPKC a gem in the rough-and-tumble world of industrial investments? It's not just its expansive network, but also its robust operating margins, a hallmark of successful railroad companies. Railroads are the lifeline of trade, especially in the post-USMCA world where cross-border commerce has gained new momentum. CPKC is at the heart of this trade revolution, offering unparalleled port access that spans from Atlantic Canada to Mexico's Pacific coast, fostering an economic conduit that is vital for myriad industries. The numbers speak volumes. A 42% year-over-year increase in revenues in FY23, following the KCSR merger, is a clear indicator of CPKC's growing influence and operational success. The company's net income rise to $3.92 billion, or $4.21 per share, reflects a solid financial trajectory, pointing to a future of sustainable growth. Looking ahead, CPKC's ambitions extend beyond freight, with plans to expand Amtrak's passenger rail network, illustrating a vision that embraces both commercial and passenger transport. This forward-looking strategy aligns with broader macroeconomic improvements and relaxation of supply chains constraints, positioning CPKC as a crucial player in the transportation sector's future. 5. Howard Hughes. Howard Hughes Corporation is not your ordinary real estate company. It boasts a diverse portfolio that spans multi-family residential properties, hospitality ventures, and seaports, reflecting a comprehensive approach to real estate development. This diversity is critical to its resilience and appeal, offering a hedge against market volatility and sector-specific downturns. Ackman's journey with Howard Hughes started back in the fourth quarter of 2010, following its spin-off from General Growth Properties, marking it as his longest-held stock. This long-term engagement underscores a steadfast confidence in the company's value proposition and strategic direction. Over the years, Ackman has not just held onto his stake, but has actively increased it, signaling ongoing belief in the company's potential. Currently, Pershing Square's $1.57 billion investment in Howard Hughes represents a significant 14.5% of the fund's portfolio. While Howard Hughes has seen a 114% increase since its spin-off, it has trailed behind the S&P 500's performance. However, this statistic doesn't diminish the company's strategic value within the portfolio. In the realm of real estate, where cyclical trends and sector-specific dynamics play crucial roles, Howard Hughes stands out for its strategic asset diversification and Ackman's active involvement in shaping its trajectory. 6. Chipotle Mexican Grill, CMG. CMG represents a significant 18.2% of Pershing Square's holdings, showcasing its prominence in Ackman's investment strategy. The journey began in the third quarter of 2016 with an initial investment of around $411 per share, leading to a remarkable 545% increase in share value since then. Ackman's stake in Chipotle is not just substantial, it's strategic. Owning 825,000 shares valued at $1.9 billion positions him as the largest outside shareholder. However, it's intriguing to note Ackman's recent moves to reduce his stake, trimming it by over 13% in the fourth quarter following a 7% cut in the second quarter. This could very well be a strategy to realize profits from a highly successful investment, considering the stock's impressive 58% surge over the past year and its strong start in 2024, with a nearly 14% increase. Chipotle's operational strategies are a vital part of its success story. With the opening of 271 new locations last year, many featuring the increasingly popular Chipotlanes, the company is on track to potentially add Chipotlanes to as many as 1,000 locations by the end of 2024. This expansion reflects Chipotle's adaptability and innovative approach to enhancing customer experience and accessibility. Interestingly, data analytics highlight a shift in consumer behavior, with more evening visits indicating a growing preference for dining at Chipotle for dinner, a change from its traditional lunchtime crowd. This shift suggests Chipotle's ability to attract a broader customer base across different meal times. Given its strong growth trajectory, impressive stock performance, and strategic expansion plans, Chipotle remains a pivotal part of Ackman's portfolio. 7. Alphabet. Alphabet, the parent company of Google, represents a significant stride in Bill Ackman's investment journey, holding the title of the most important stake in Pershing Square portfolio at close to 19%. Now, why Alphabet, you ask? Well, it seems like Ackman saw a golden opportunity when Alphabet stock took a bit of a dip early last year amidst all the buzz that it was trailing in the AI race, especially against a giant like Microsoft. However, Alphabet's continued earnings growth and operational excellence in 2023, culminating in a record $84.3 billion in operating earnings, vindicated Ackman's investment choice, with the stock appreciating 71% since the start of the previous year. This investment aligns seamlessly with Pershing Square's investment philosophy, which leans towards companies with a robust global brands and diversified portfolios, especially when they are available at attractive valuations. Alphabet, with its vast array of innovative products and services, fits this bill perfectly, offering a blend of stability and growth potential that's hard to overlook. Ackman's approach with Alphabet is a classic example of his investment style, making concentrated bets on fundamentally strong companies where their valuations become appealing, then maintaining those positions over the long haul to maximize gains. And there we have it, the inside scoop on Bill Ackman's investment wizardry. Now, what's your take on Ackman's investment choices? Do they inspire you to look at the market through a different lens? Or perhaps they spark a curiosity to delve deeper into the rationale behind these big plays? Let us know your thoughts in the comments. Also, make sure to leave a like, subscribe, and turn on the notification bell.